Hi everyone and welcome to the weekly update with me, Rich Perry, market analyst at Handtech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Now, obviously the big news over the weekend was Greece voting no. Greece has rejected the proposals or the bailout measures that the creditors are putting forward. And it certainly seems as though there's a bit of an impasse in the very near term. Now, what that really means is that Greece doesn't want to leave the Eurozone. And the creditors presumably don't want it to leave either. So they need to sort of come to some sort of middle ground, really. Greece is not willing to accept more austerity measures, and all along it's basically been saying it needs a reprofiling of the debt, which, to be honest, anyone who has looked at it with any sort of neutrality would understand that that is necessary to even sort of push this situation forward and not have it continually digging the hole ever deeper. So the creditors have they've now got to play the next move, I think, and if they're not willing to budge, then that's going to put Greece in a really tight spot, because they still have no banking. Their banks are still closed. There is still no extra liquidity being provided by the ECB. If the ECB doesn't extend the liquidity to the Greek banks, then there is a real problem and a potential for a Grexit fairly quickly, potentially. So it looks like this situation is now coming up to a bit of a head. So you've got that through the markets, and the threat of contagion has, to a certain extent, actually been contained today. The markets have not been as precipitous in their declines as potentially they could have been. The spread between the Spanish and the German yields, which I've been using as a bit of a core periphery spread, to illustrate that core periphery spread, that hasn't actually shot too far higher. It's gone higher, yes, but not too far. And although it is pushing back above, or has held above 1.4%, or 140 basis points, it still is not excessive at this stage. So the threat of contagion is still under wraps to a certain extent. Now, you've also got a lot of US data this week, because last week we had that non-farm payrolls report that sort of started to suggest that perhaps September was a bit early maybe for a rate hike. You saw the earnings growth declining back towards 2% on an annual basis. And that's not what the Fed's looking for. They will certainly be watching that number and be a little bit concerned by that. So the data this week will certainly need to improve quite dramatically. You've got the ISM non-manufacturing on Monday. Certainly that would kick off the week. And there will also other things like the jobs, and also the US trade as well. So things that you'd need to see improving for the US to just start to think about hiking in September. Now you've also got the FOMC meeting. The FOMC meeting minutes, if they come out and show a little bit of a sort of hawkish hints coming through, then perhaps the market will sort of say that they maybe pushed their expectations a little bit too far out, following on from that payrolls report. So you've got a fair bit of US focus this week, as the dollar has started or has been strengthening generally, and that could continue if that data comes out strongly. So the impact on the forex markets, well, that the combination of Greece and also the strengthening dollar has pulled the euro dollar lower. Now back towards that key pivot level around 110.50. I still think that's a line in the sand. Above that you're positive, or more positive. Below that you're looking more corrective. And I think where it settles there in the early part of this week could be key, because if it breaks below 10.50 and consistently, then you're looking back towards 108.20 once more, which is the key. I think it was the key May lows. So we've got that on the cards at the moment. So we've also got the cable price, which is pulling lower as well. That continues to look corrective, and looks like it's coming back towards the 154.50 level. Interesting, we've also seen the Aussie and the Kiwi pulling down to multi-year lows as well. So this dollar is still strengthening. Interesting also that the safe haven play, the yen, has strengthened slightly, yes, on Monday, but not too significantly. The 122 breakout level continues to play a bit of a floor near term. Yes, you've had a couple of intraday sort of moves below that, but a very quick rebound back through that 122 level, and it continues to remain, I think, a key level where you're going to see maybe the next key low in place. So, the impact on the indices that we're seeing through today. Well, there was certainly fear that the DAX, for example, could open significantly lower on Monday, or could have done, but it didn't. It held on to that key support at 10,800 and has maintained that support as well through the session. So it's interesting that that support remains in place, and I think still trading on above that level. I think you're not getting too concerned about the DAX quite yet. The S&P 500 is an interesting one actually, because we've got earnings season coming through this week, and beginning with Alcoa on Wednesday. So allied to the fact that you've got a lot of data for the US as well, you could see more of a US focus this week on the market. So that could help to support the S&P 500, which last week dropped below the support at 2070, needs to reclaim that level. Be interesting to see if it does, because you had a 2-day rally that's just started to roll over a bit, and again it'll be interesting to see how the S&P 500 trades today on Monday in reaction to the Greek no vote. Finally, on the FTSE, we've got the support that was broken last week, or the support that got broken around, and basically the rally fell over at 6,650, and you'd need to see, I think, the a maintaining of a move and a rebound back above 6650, and better than that 6670, which was the key breakdown, old support, new resistance. So that is the key level you need to see FTSE breaking on the upside. For gold, it's interesting because we've had the safe haven play on gold did move at first on Monday morning, as it did last week, but has subsequently given back all the gains, and it's trading flat to lower now. So the safe haven play on gold continues to suffer, continues to sort of be a bit disappointing really, and certainly allied to the fact that you've got dollar strength coming through again. You're seeing the downside pressure on gold, and it could well come back to test the 1156 this week, 1156, 1157, and subsequently maybe even that key March low of 1143. So the gold price continues to be sold into strength. So the economic announcements we've got to look out for this week, as I said, you've got the ISM non-manufacturing this week on Monday. Following on from that, you've got the first of a few central bank announcements this week, which is the RBA on Tuesday, and it'll be interesting because the Aussie has just broken to new multi-year lows on weak data as well on Friday. So that was interesting, whether you're going to get a dovish outlook from the RBA. Also on Tuesday, we've got the JOLTS and the US trade balance as well, so that could give you more information about how the US economy is doing. On Wednesday, we've got the FOMC minutes, which is the key bit of data for the week. And then looking out towards Thursday, we've got, again, Aussie unemployment, which is a surprisingly volatile bit of data, certainly for the Aussie. And also the Bank of England monetary policy. Bank of England doesn't tend to do a great deal, or certainly hasn't done. But it'd be interesting beginning to look at different aspects of the monetary policy statement and also the minutes, because there's possibility that certain members are beginning to turn a little bit more hawkish, but maybe not quite yet. And then on Friday, we finish off the week with Canadian unemployment. So again, lots to look out for this week. We've still reacted to Greece. We've still got a lot of focus on the US and earnings season coming starting this week, so lots to focus on stateside as well as Eurozone. So I wish you good luck in your trading today and all throughout this week, and I will speak to you again next time. Thank you.